Hi, everybody. This is Giovanni. I am with the Bitcoin Live show. Here with me is Marcos and Costa from the Minotaur trading system team. Um and like always, we cover the latest price movements of Bitcoin. We try to analyze with different tools, including the power law indicators, and also we often look at the global liquidity, but we have a very powerful tool to look at the local liquidity. And usually we end with discussing our trading system that we developed together with the Minotaur team, and we show the latest activity, how the bot is reasoning through this correction that we see, and how useful and powerful this tool is. Okay, so let's dive in and let's start with looking at some of the power law indicators. I'm going to share my screen. Okay, so today I want to show you this particular indicator. I try to change and show different ones on different episodes. This one is very simple. It's the simplest possible form of a power law. Basically, you see that straight line. That is the power law. It has held for a long time, basically from the beginning. I usually show this deviation that is one of the point of reference for the power law. Is basically this 60% deviation. So if you look at the general trend that goes, it's kind of a compromise between these very large peaks that we observe and the bottoms, right? So it's trying to keep a balance between these two. In a graph like this, where you're taking the log of a price, I have repeated many times, you're going to see some kind of a curve. And this is the power law, right? Power law means, just as a reminder, the Bitcoin price can be expressed in a very simple equation. It's amazing, actually, that a simple equation can describe this behavior of Bitcoin over a long time, and basically says that the price is proportional to time itself to some kind of a power, and that power is very close to 6. Now, if I show you this graph on a log chart that has both the log of price and the log of time, you will see a straight line. That is one of the things that are very striking in the power law, that it will look even simpler, basically a straight line. In a graph like this, where we take only the logarithm of price, and the reason why we do that is because TradingView doesn't allow to take the log of a time, because usually people don't use this in financial systems. Bitcoin is so unique. I wish we had that option, but they don't, right? So it looks like a curve like this. Now, if we take off actually that options, where we take the log of a price, what you will see is this. So basically, it looks kind of like a parabola, right? And the reason why it looks like a parabola, because anything that has, so first of all, it's an upward parabola. So anything that is basically a power of something, like in this case, time, and is a value that is bigger than 1, if it was less than 1, it will look bent, right? But because it's a power that is bigger than 1, will look like going up. It will not look like a straight line, but something that goes up. So it's actually an illusion that we have this bending downwards in the log linear chart, what we call the log linear chart, right? So if you take a log, like here, you see it looks bent like this. It's important to understand this, that it doesn't mean that we are having some kind of a ceiling, because some people are confused about this. So even high level people being confused by this idea. It is not a ceiling. Remember, the real graph is something that goes like this. It goes up like a parabola. And how steep that parabola is depends on the power, right? In our case, it's going to be much steeper than a normal parabola because parabola is 2, and we are talking about a power that is close to 6. So it's basically a super parabola. When people say the price went parabolic, they really meant exponential. And exponential means um, that in a chart like this, if Bitcoin was exponential, it will look also like a very steep curve, but you will not be able to distinguish it from something like a parabola. Your eye is not able to do it. The way to know if we're dealing with an exponential is that if I take the log of a price, then the exponential will look like a straight line. And if I take the log of both the x-axis and the y-axis, then it looks like a straight line if I'm dealing with this. I know it's a little bit complicated, but because we're using all this terminology, and these are concepts that I explained before, but it's a good thing to remind people about this concept. But anyway, so if we dive in the activity itself, and by the way, what is this second line? It's simply like a particular deviation that it's big enough to kind of be close to the peak. It's to draw a curve that kind of predicts the behavior of a peak. It's more complicated because it's both a power law and an exponential decay. So there is not a single power law that describes how the peak behave. So I just draw a line that I don't remember. I think it's maybe a 20 or 30% deviation that is big enough to start to be close to the peak. It's just a point of reference. Right now, it will be nice even to go there. You can see actually the actual peak went much farther away from that, right? But right now, it will be nice to go there, right? We are not going there because we have been basically following the power law very closely. That is what I have repeated in many of the shows. That we started the bull market in November when it was supposed to start. It started exactly correctly here, but then we had the bull market November, yeah, exactly here. It looked like a real bull market. We started to have all this activity, and then we kind of reach a local maximum, and then we corrected, and this never happened before, that we actually went down the power law during a bull market. It was the first time. Then we seem to correct that, to go back to the power law, and then every time there is an attempt to leave a power law, we go back to it. So this seems a story for this particular bull run, right? It seems it doesn't want to leave a power law for some reason. And that is the only time when I like, I am okay with leaving the power law, because we usually, what happens, right? We leave a power law sometime in a very aggressive way where it seems almost the power law is being broken, right? But then there is a correction that brings us back, and I'm all fine for that, right? Because it's actually an interesting time. This excites a lot of people. Many people that never invested in Bitcoin, they see all this crazy activity. They think it's going forever. They join. Now, sometimes people leave during the correction, but it actually, I think this boost helped somehow Bitcoin in the past, right? There's a lot of media attention, and also if you know what you're doing and you can localize, you identify the tops, and this is one of the reasons we develop all these tools, all these indicators to try to identify the top. You could do things like selling partially your Bitcoin and then try to rebuy them at the bottom, or maybe our days we have so many tools. You could use maybe options, maybe like put options, etc., and kind of try to gain from that, right? By if there is a huge big correction in Bitcoin. And it seems we don't have that this cycle, right? Every time it seems we go in that direction, then it doesn't happen. Now, we are repeating also the same thing, that we still have a few months. Bitcoin sometimes does crazy things. even in a very short amount of time. So it's not completely impossible that we have a two pair in whatever is left over, right? We are end of August, so we have basically 3-4 months to try to um, correct, to go there to the target. And people ask me all the time these things, right? What is the target? I said it a million times, right? 200K. Why 200K? Because it's based on the observed decay that we have seen in the past. In the beginning, it seems actually very conservative. Many people didn't even agree on that. Now it seems actually optimistic, to go to 200K. Can we go there? It's becoming more and more difficult with time, right? We have less and less time. Two pair in 4 months is not unheard about Bitcoin, but Bitcoin will have to go back to what he was doing in the past, and he seems not to want to do that. So that is the only thing I have to say. That it seems that we are repeating this pattern of wanting to go back to the power law. Now you can see, so you have this graph here, right? So this is showing the overall behavior of Bitcoin. So this graph is very interesting because it shows the deviations from the power law, and they are normalized. So usually, if I showed you the deviations, and I can do that, this indicator as a function where I can show different type of deviations. So for example, if I show you the deviation relatively to the trend, so that means it's not normalized, are pure deviations. Look at this. The first few the first few peaks. This is the first one, right? The second one, the third one. Notice how huge these deviations were. We're talking; these are expressed in percentage, right? 1,200%, or even more. Actually, if I go to the peak, it says almost 1,500%. 1,500% relatively to the power law. Huge, big deviation. Then, as we get, we started to go, to go to the next bubble. It goes down 1,100. Next bubble, it was 500%, right? 5 times, right? So you can think about this as times, right? 15 times, 11 times, 5 times. The last bubble, it depends which one you're using. If you're using the second peak, we're talking about 183%. So almost three times the deviation from the power law. So this is one way of showing these deviations. And right now we are not reaching that, right? We kind of I calculated that because, one thing you can do is say, okay, it looks like there is a decay, and is this decay something that is organized, right? Let's see. If I take the log, it's one of the things that I never explained before. I mean, explain it, but in a different way. But if you take the log of this deviation expressed in percentage, you can actually draw a straight line through the peaks. That means there is an exponential decay. It's very well-defined decay. You can actually write a mathematical formula. You could have used these 3 peaks, draw a straight line, measure the decay of that line. It's a line because I'm taking the log, right? That means an exponential. And I could have predicted the fourth one very closely. Like when people were talking about, I can even do this exercise, right? I can add a line, I can show you. When people were talking about, so you can draw a line to see there's a line. Let me move this. Okay. There is a line. It's not perfect, but you see, it's a pretty good line. That means there is a mathematical pattern that is an exponential. In fact, if I show you, if I take the log, you see it looks like, well, it doesn't do it for I will have to calculate the formula and then draw it as a formula. And if I change the log, it will also change the shape. In this case, I draw the line by hand. And so it doesn't change it if I take out the log. But if you understand what I'm talking about, this is an exponential because it's a straight line in a log linear chart. So you can use this. You could have used the first three peaks. Imagine I stand this line. You see how it predicts? Predict means if I stand this line and I draw a line through the first 3 points, it also goes through the next peaks. So I could have used this to predict the next top. So if we stand it, extend it, extend it, extend it, we are expecting, you see, this is why I draw this 200K here, because we are expecting basically if this line continues, to go about 70%, 80, 77%, whatever it is, right? 80%, 80%. It depends where you do it. It's close to 70, 80% deviation from the trend. We are now there. You see, we are here. We need to go there, right? And so it looks like it's not behaving like in the past. Um, Something is different. And the one that I was showing you before, basically what happens, and we can take this line because it's distracting. I'm going to take off a log. Okay, so the way I obtain this graph is that I calculate this decay that I just showed you, and then I account for it. So it's basically a normalization. I basically eliminate by dividing by the decay, right, mathematically. So the result of that is that now it's basically every peak seems the same. You see, they look the same height because I took away the decay. Every peak looks exactly the same height. And that is cool because then you can actually, instead of expressing this deviation in terms of percentage, you can create an index, right, between 0 and 100. 0 is when we reach a bottom, and 100 when we reach a top. So we know closer we are to 100, that is the expected peak. Again, under this assumption that we follow this decay. If that is decay is a real signal. It has been so far, but for some reason it seems that it's not behaving, this cycle is not behaving like the previous ones. And where we are right now in terms of that peak, we are around something like 73 or something like that. And you can see it's different, right? Now, even with two peak, right, we went up. So the classical one should be like this, where we start with bull market, we continue to go up, 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 and then reach a peak, and then we go down, right? This one was different because we did this going up, but we did it a little bit too early. We should have started maybe later. And then we peaked, we went down, and then we had another peak where usually we have a peak. So if it was just one peak, it will have looked like this. We'll have looked like we started here, then goes up and reach a peak, right? We're not doing that. We're not doing that. We had actually correction that brought us back down. That never happened, at least so strongly. Even here, right? You can see we kind of barely touched this line, and then we went up again. Here, we are doing something different. We are now reaching the peak. It seems, right? It is correct. We're staying there. So I don't know. This looks different this time. We still have a little bit of time left to reach that top, but it seems something like it's keeping down this bubble somehow. So that is my analysis. Okay. Let me know if you have questions. You guys can interact with us. You can ask questions on all the different channels. Right now we are on YouTube, X, and so on. I'm going to leave a word to Marcos.
All right. Let's see what's going on in the world of liquidity. I'm going to share my screen here. Um, there's a lot of chatter on social media right now. People are really, really getting scared a little bit. And that is the nature of the game. The game is to shake your boots. All right. So here's what's going on now um, in the world of liquidity. What really matters, what fuels the market. The market can't move without liquidity. Um, so we're just looking at the futures, perpetuals, Bybit on Bitcoin. That's where the leverage is. Where the leverage is where the bubbles are formed and where they pop first. So we get a good indication on the direction of price in the derivatives. So having said that, no matter what's going on, I mean, it's just going crazy on social media, YouTube, all these influencers saying, okay, it's over, it's not looking good, emergency this. I see so many videos that say, hey, it's an emergency situation. It's always an emergency, right? Okay, so here's what's really going on. um, let's just take a, when in doubt, zoom out, right? So let's just take a step back, take a deep breath. Everything is cool, right? We're going to do this real cool. So what's going on in the market currently is the same thing. We have liquidity on the short side. This is a short pool here. Massive amounts of shorts that have been building up since the last price discovery that we got into a while back in December 2024. So we've been building this massive amount of liquidity on both sides, and the market makers collectively and then people that can move the markets have been harvesting that liquidity. Impulse, there's another big displacement of liquidity right there. And we had a small one here. So this is business as usual. There's nothing changed. Nothing has changed. It just takes time to play out. And here's another confluence. If we look at the opposing side, which is these are the longs stopped being harvested April 7th or somewhere around early April. So that hasn't changed. Longs are being positioned for the return at some point, maybe after the final bull push will come for this liquidity later. This is the return liquidity. It's a very simple business model. Let's not make it harder than it is. You need to, this is buy side inventory. These people here, these shorts, these longs are forced to sell at low prices. So this is your fair market price here. This is fair value. Anything that you can buy below that is wholesale. This is wholesale down here. So the market makers took all this inventory, this wholesale inventory below fair market, below fair market. They bought this inventory and then they started to return that inventory to you have a massive amount of locked in sellers, I mean buyers who are going to buy high. All of these people have already committed. They say, hey, look, I am going to buy it high in these high price ranges above fair value. So it's a very simple business model. The market makers buy low at wholesale prices and they sell to retail prices higher. So let's just kind of walk through what happened. They were liquidating here, picking up inventory, and then they started dispersing or displacing or that inventory here. One major liquidation event. We had a major one here on the 9th where they're starting to distribute that inventory, and we haven't changed. So I just want to give you that background so we can just be cool about everything. Let's not lose our heads here, our hats. So let me clean up this drawings. Now let's zoom in a little bit closer on what's happening now. Let's start zooming in a little bit. So from a simple business model of buy low, sell high, um, this is internal liquidity, and so is some here, right? We're going to take a look at that. If you think about it, we had a major concentration of liquidity right here. This could rebalance a portfolio for a market maker, right, or an institution. So they're not just going to move into that inventory until they have offsetting inventory to balance it out. That's why a market enters into this consolidation zone that gives them an opportunity to pick up the opposite side, these wholesale sellers here selling below fair value, and then they're able to disperse that inventory here. Okay, so we're doing it again. They're doing it again. Okay, so the distribution, right? So same thing, same pattern. It's just very simple. So we have another consolidation zone where the market makers collectively check the market and they create this consolidation so they can establish the temporary or the local fair value, and at the same time, they're building liquidity. There's some internal liquidity there. We can actually take a look at it right here. We'll just go zoom in on the higher concentrations, and you can see it being built in. So they build in that internal liquidity while they balance their book, because we already know there's a tremendous amount of offsetting liquidity buyers up here. If you have more buyers than you have inventory, what do? You prepare and get more inventory to offset or to balance out these buyers. You're going to distribute this inventory into those buyers. So let's put it back where we can see that again. So right here, I'm going to add in the liquidity again, and we can see that there is a tremendous amount. And that is why the market could have just kept going. These liquidations are like domino effect, right? Why did it get checked up right there? Well, there's a tremendous amount of offsetting buy demand there. And if you are closed opening positions that you don't have an offset for, then you would be short, opening short, and you would have an imbalance. You'd have a problem. You don't want to send the market up where you have an imbalance of short positions. This doesn't make any sense. So obviously you have to send it up, bring it down, and then it brings in more liquidity down here. This move up was very manipulated, where we had this huge rip up. Everybody thought we were going to 200, but we weren't. We were just making we already were putting 124 as our target. We hit that within $500, and then now they're coming back for all the liquidity that was sucked into that move. Okay. So we had liquidity that was formed here on that move, and we have liquidity coming back down. You can see that coming in there, it's coming in up here. So they're getting them, they're going to get ready to get them on both sides. So let's keep our hats on. Nothing has structurally changed in the market yet. We haven't lost these levels. Um, right here, we have a generous amount of liquidity still sitting here untapped. We might mitigate that. That's fine. We won't have any major structural problems until maybe if we come down here. I don't see a path to that yet. There's no liquidity to take us there. So if anything, over the weekend, we might mitigate this down to 110. If we hit 110, fine, no big deal. And then we'll start coming back on the upside. There's one other development to look at here. I like to keep things real simple. It's not hard. Okay, it's easy to get complicated. It's hard to keep it simple. All right, when we look here, this was very promising. We have a nice pool of short side liquidity developing here at 155. It's continuing to grow. We're a little bit more. We've put on another 1,000 points. That's actually good. It's another 1% there. So that's just since the last call. So that's continuing to grow. But we have a problem here, Houston. We have a major gap here that the price needs to fill before we can get there, right? So to show you how ingenious these algorithmic programs are, that's part of the reason why you have this type of price action here, or we're doing that. We're building that now. The bridge is being built. Let me show it to you. I'm going to back out the 25 because it doesn't matter. This is 3x and 5x up here. I'm going to take out the 10. So we're just going to take a look at the 3 first. As you can see, it's being bridged in right now. That's the connectivity that we need to start to make the move up. We can't get there without that being built. Somebody's already watching that. The price already knows that. So let's look at the 5x and see if we get the same type of phenomenon. Yes, on the 5x, it's the same thing. It's being closed in. So the 3 and the 5 is actually closing the gap. So the 5x is here, 3x is there. So once we get this gap closed in, then we have the bridge that we need to keep going higher. It's not going to happen until we get there. So this is all a natural part of the process that goes on with liquidity creation through price action and liquidity harvesting through price action. You have to have both. One last thing, and I'm going to turn it over. Um, so one thing that makes me sleep good at night is until this stops, they are harvesting shorts. It hasn't changed. We actually stop right here because we have so much they have to balance out. But this game hasn't been completed. until we finish harvesting the shorts. Like you could probably say, well, what about on the last time we got down here? Well, in a bull market, we only typically harvest the 5x. So we took it 90%. So when we do a a bull market, we definitely on the short side. We take it all. We don't leave any. We take 3x on shorts. So let me show you that. Forgive my computer here. Um, Let me refresh the page so I can show you that. Um, to put the liquidity back here. Bear with me. Okay, so here's the previous example. We have 3x on here and we take all of the 3x. On the bull market, we take all the 3x too. So we got work to do. So until that changes, until the market flips, I'm sleeping good at night and you guys can watch YouTube and do whatever it is you do. I'm not going to get caught up in all that FUD. You know, I still have everything I need to sleep good at night. So that's it. That's what's going on right now. Tomorrow's another day.
Okay, was great. Thank you, Marcos. And we have
All
a
right.
bunch of questions, but we
All
can
right.
go
Let
to
me
the questions later. So, Costa, well, what about the bot? What the trading systems?
Yeah, I'm going to just do a quick one because I think we'll get to some of the questions, but this is a post I just made on X, and I think it's just a good illustration of of when you're running a bot and this stuff happens in the market, we're all
Yeah.
really happy because we've got the macro lens that we're looking through, which Marcus just took you through
So,
how all that works.
explain the
And
context of a picture. This is a famous movie, right?
this is a famous movie, Swap of the Greek,
Yeah.
right? And
And
basically what we're doing is we're
he's a
dancing the
Greek
price
guy,
down.
right? Like you. You're also a Greek guy.
Yeah, like
And
yeah.
half of
Yeah,
me
he's actually
because
Mexican. He's actually Mexican in real life. Anthony Quinn was
I know
Mexican, but in the movie he is Greek.
this was the time
Okay,
when Indians were played by white people, Greek by
Yeah.
that's
Mexicans.
right. Yeah.
Yeah.
So just to give you a basic understanding that we can comfortably dance the Zorba all the way down to the power law support without having to be stressed at all. That's without a rally. If there is a rally at any point and we hit our take profits, we're able to reset at the new price point and work down even further, which makes this so safe, this system. So again, to reiterate, we could literally crash to 42K in a straight line and this system will still be working completely the way it's engineered, right? If there is a small enough rally for us to take our profit, we're able to reset and walk the price even further. And we can even walk the price below power law support. We never take anything as a given. Nothing's a certainty in investing. Even if it looks statistically certain in the models that we produce, we need to always assume that things can be broken. And the system is able to reset and even work forward. Technically, we could walk the price all the way down to zero. That's why right now these kind of corrections we actually really enjoy because it allows us to fill up our bags and make some profit on this trade. And we call it a deal, a base order, and a up to 10 safety orders usually is what we do. And then what we tend to do is then convert the profits back into Bitcoin, which then allows us to then increase the size of our positions next time if we want to compound in that fashion. So yeah, to cut a long story short, it's I'm not worried either. I actually think this stuff is really good. One thing we can discuss when the time comes is capital rotation. Personally, I think that the bubble will come, but I think that most people are going to be sweating so badly that they will miss the opportunity to rotate the capital, and that really is where a lot of the money is made. So I actually really like this price action. I really like the positions we've been taking, as you can see here. And I look forward to the next, let's call it 3 to 5 months. That seems to be what's left here if we look at the clock. Anything to add to that, guys?
I love it. I
Yeah.
love it.
100%. Yeah. That's
Yeah,
it.
I used to be worried about things like that, not because it means anything, right? We are used to these things, but you still, it's human nature. You like Bitcoin going up, and when it goes down, you're not, you know, even if you understand, even somebody like me that has been here for, years and years, it still gets a little upset. But now I'm saying, oh, cheap Bitcoin, is the first thing that I'm thinking. And I don't have to worry and do it myself and try to time the market and everything. It does it by itself. And you can see it finds this, because of how the algo is structured, it finds these local minima pretty easily. And do you want to, I know this will mean to move a little bit to the picture, but do you want to show the significance of these two lines, the orange and the yellow one? Because I think it.
Yeah, I can just bring it to the trading view live.
I really, that is so important, right? What is two lines? I know, but for the audience, can you explain the two lines?
Yeah, so we can have a look at the price range here. We entered the, actually we can go to even we can use this chart, the more higher frequency one. I've got these two settings set up for this call that we do every week. But okay, so we entered the first trade here at 118. We're currently down to 112, and we've entered these 3 safety orders.
So when you first of all, the violet arrows is when we sell, and the blue line is when we buy, right?
Yes, the violet is when we sell, and the blue is when we buy. So
and again, for the people that maybe are new to the show, what do we buy and sell typically? We are not buying sell, even if that can be done. We are buying the contracts, right? We are buying.
Correct. We're trading. Contracts. This is a few. Correct. These are
perpetuals. Perpetual contracts.
Yeah. Look, we can do it on spot, but the fees are much better on perpetuals. And trading futures makes some.
And the relevance of that is, and this is really what attracted me when the guys explained me the system, and we started to work together, is that to do that, you don't have to sell and buy Bitcoin. You can still buy Bitcoin on the side if you want to DCA, and you could use, in theory, these algo to do that too, right? You could buy more and more Bitcoin if you wanted to. That is another question that I want to ask you, if we could use it for pure DCA without selling, but we can have this discussion on the side. But the idea is that once you have a certain Bitcoins, right, a certain number of Bitcoins, you can take a percentage of that and use it to do this. You can put it up, because there is some risk associated, with any trading at all. One of the biggest risks is keeping it on exchange, like Bybit, for example. But the idea then it will be to use that coins as a collateral. You don't have to sell them. They will sit there anyway, right? They are sitting there anyway, doing not much beside, long-term value of Bitcoin. Now you can use it as collateral to buy these contracts. And that allows you to get more Bitcoins, right? Because then when you make these gains, you can convert it immediately into Bitcoin. So you get more Bitcoins. That is the entire idea. I'm trying to explain this because we did a few times, but maybe there are new people that don't know how this works. Okay, so please go ahead, continue with.
Yeah, so the really the price range here is it's not too much. It's like a kind of a 6-8% deviation, but you can see if we stretch it out what it really looks like there. So what we're doing here is, and as you can see, the safety orders that we're initiating are lowering that significantly, and they're actually doing it proportionally increasing each time as well.
Exactly.
And this can
this is shown by the step, right? Notice how these steps are being bigger and bigger. That means as the price goes down, we are actually trying to reach, an average that is closer and closer to the bottom. You never get exactly the bottom because it's an average, but we're coming there. That orange line, whatever that color is,
it's the cost basis. It's what your cost is.
It's the average cost. Is basically, if you are below that, if the real price is below that, you're in red, but it's just temporary, right? And eventually, the price will go above it, average basis, and then what is the other line?
The green line is now your take profit, which we can engineer. Basically, we've got. The good thing about our algorithm is it's like a Swiss Army knife. You can actually engineer it just to suit however you want to trade it. You can see here this particular take profit is around 2%.
Yeah.
So that's that gap there.
So whenever you make this 2%, I remember, because we use a little bit of a leverage, it doesn't need to be a real 2% in price, right? Because we actually use a little bit of a leverage. So it's really a cool idea, right? So as the price goes down, you're averaging down your cost. This why is a DCA, but it's a DCA done on the futures contract.
Yeah, it's effectively a defensive position that will defend all the way down to the power law support.
Exactly.
Basically, and what happens 9 times out of 10 is, we go down we defend, and then we take profit. Sometimes we have to defend more.
Yeah.
Sometimes we don't have to defend at all, which is like.
And you see here is an example of that where we average down, and then the first time there is a correction up, boom, we sell. And then we make profit, and we repeat.
And this one here is when the algorithm gets it right. No defense needed. We just simply enter a trade and take profit. So, in order to be successful with this, it really comes down to risk management, right? What's the position size of the initial position, and then how do you have enough reserves to engineer a strategy that can DCA you all the way down to the power law support? And that's what the consulting side of what we do. This is why I guess a lot of times people. A bot is like, it's not really the right word, because the idea people have a bot is like, I'm gonna give you something and you can just plug it in and run it. But there's so much that goes into the actual engineering of the strategy beyond the take profits and all that. But like, how much capital do we deploy into these positions? That's the mathematics has to be so sound, and the distribution of capital has to be so efficient. And that's a lot of the work that we put into when we work with our clients one-on-one, is we actually work together with them in order to engineer the strategy based on what their capital requirements are, how much they have to deploy, whether they're using Bitcoin, whether they're using USDT. So there's a lot of consulting that does go along with this system, and we work with everyone one-on-one as well, which is really important to understand.
Yeah. So, look, it's not maybe for everybody, but I think if you have some decent amount of Bitcoin, and we don't want to discuss precise amounts, etc., make a call. And by the way, here is the link to make a call, and chat with the team. It's a free call. How does it work, Costa, usually?
Yeah, it's a full 45-minute demo where we'll show you the live trading accounts. We'll show you exactly how everything works in depth, and really if it's a good fit for people as well. So we do these free demo consultation calls, just in order to see if you're well aligned for what we do.
Perfect.
Yeah.
Because look, most people have this developed concept of hodling, that is a great thing because all of us are hodlers. But then I think nowadays, hodling, it's not enough, because yes, Bitcoin is going up and we are thinking about maybe something like 10 per in the next 8 years. That is what the power law shows. But what if you get a consistent gain, yield on top of your Bitcoin? It's a new concept, right? Not many Bitcoiners discuss that, right? There is a little bit discussing of these tools like MSTY, for example, right? That's supposed to give you some yield relatively to your to MicroStrategy. But basically, what they do covered options. So this is another way of doing that, but you're doing it on Bitcoin itself, right? And you don't need to buy some external stock. There is a use for that. I have some STY myself, but this allows you to do this kind of the same, but independently, right? You don't have to open with this company continue to work well, or there is something happening on the market. You do it automatically.
I think our downside protection is much stronger than those companies if something goes wrong. Definitely. Right. I think this is a much more low risk strategy than what they're doing with some of those derivatives of MicroStrategy.
So it's an initial investment. It's not, like Costa explained, it's not like one of these cheap bots that you can buy, for $100. It's not that. calling it a bot, it's really a misnomer.
It's a system. It's a
It's a
system.
system that is there is a lot of work, a lot of development. You have an entire team working on these things on a continuous basis. It's a relationship, but there is even a service that we offer that allows you to talk with the team, Marcos, me, Costa, and get advice on how to optimize everything. It's something we spend a lot of time. I'm very proud of this. It's not about making money, even if it is a business. It's about helping the community. I'm very, very, very
Yeah.
convinced about this, right? And this is why I do this show with the Minotaur people, and we are explaining this algorithm over and over again. We are not inventing anything new besides how to integrate the power law. The power law, it's an essential part of a system. Basically, to explain the main idea, and maybe Costa can add to this, is that you see when we do this safety order, I have a safety order, or this order that allows you to DCA as the price correct. You have to calculate how many do you want of them, how big they are going to be. So every time we go down, we increase the amount, right? So it's going to be a certain percentage of whatever you are deploying, and these orders are becoming bigger and bigger as you go down. Well, how big they are going to be, right? It's a mathematical formula. And if you don't have a point of reference, you're going to guess. You're going to say, okay, maybe the worst correction that we could have could be 20%, 30%, something like that. These are most of these systems, similar to this approach, right, are created. Our secret sauce is that we use the power law based, with power law support with line that I showed you before that we never violate. Bitcoin seems never to violate because we arrive there. Even during COVID, we arrive there and we bounce back. It was one of the strongest crises that we had in recent times. That never happened. That we went below that. So it seems to be something fundamental. There are also theoretical reasons to think that is fundamental because it seems that we have a support line because it's associated with the cost of producing Bitcoin. And so we use that as a reference. We can calculate how many of these orders we are, how big they are, based exactly on this idea that that is our kind of like flying an airplane, and have an altimeter, and how far you are from the ground, right? So you can do whatever maneuver on the airplane based on knowing how far you are from the ground. If you didn't know that, you will be in a very bad spot in flying an airplane, right? It will be very dangerous. And so it's something powerful that we integrate. Now, there are other things that we do too, but that is the main fundamental idea. Costa, do you want to add to that?
I got a Marcus style analogy. So I don't know if you've seen the Temple of Doom, the Indiana Jones, the third one. when there's the gap between the two cliffs and it's invisible down the bottom. Well, imagine trading and you don't have the vision, right? You're looking all the way to the ground and you're scared. You don't know where to go. The power law is like that invisible support that only Indiana Jones can see, and it allows him to walk across it, right? So having that power law support there allows us to contract the trading range, which allows us to extract significant profits because we're able to draw a line and say, okay, this is the range that we're going to be flying in, right? And anyone who doesn't have that visibility, they don't know that exists, and they're able to collapse past it. But we're the Indiana Jones walking that line. Again, we don't treat it as a certainty. Nothing is 100%. So we use it. We reference it as the first point of defense, but it's still a good analogy.
Very good. All right. Do you want to take some of these questions? Let's see.
Yeah, I think there's a lot of good questions. Yeah.
Let's actually show them here. And we can highlight. Okay. Okay. Thank you, Greco. Maybe. All right. So let's take this first one.
All right. Costa or Marcus, Can you talk a little bit about the effectiveness of the bot on the shorter time frames?
Are you talking, Marcus?
Um, I have the 15-minute conservative time frame and wondering about your experiences. And um, so, yeah, hi, Richard. Thank you. Um,
Thanks for signing up,
yeah,
Richard, as
appreciate it.
well.
Thank you. Welcome aboard. I mean, welcome to the world of becoming a market maker, right? So, welcome aboard. Um, yeah, it's very effective on the 15-minute time frame and the shorter time frames. It can run. The algorithm is built to run at extremely low time frames if we want to take it there. We typically don't go past 15 to 5 minutes because it's kind of like it gives you the better of both worlds. So if you're trading on the 15-minute rails or the 5 minute, you're going to be very, very pleased with those results, even though the algorithm can go lower than
The,
that.
Yeah, the 5 minutes just going to give you. So the lower the time frame you go, the more
Yeah,
trades you have, because the less obvious the trend becomes. So the bot will actually enter trades
yeah.
faster. The longer the time frame, 15-minute, 30-minute, 1 hour, it actually,
You
if the
hear the signal.
trends are more
Yeah,
significant, and you'll get less signals. So the 15-minute we find is a good balance in terms of activity and positioning. But Marcus in the trading desk does drop it down. He's been as low as 1 minute. However, there are some limitations running a 1 minute. It's almost too fast. The positions are too quick. And also, we have issues with the amount of candlesticks that appear on a trading view chart. So 5 minute and 15 minute is usually where we stay. But yeah, hopefully that explains. It's a 5 minute during a bull run, it can work really well as well, because if the market's rallying, you're able to get in a lot faster. We're not waiting for the opportune moment. We're just entering a lot quicker. You will find that you enter more trades and close more deals.
Okay. Right, so I think this is based on these models called the log periodic power law that is supposed to show us how, as we come close to some kind of a peak, we're going to have faster and faster oscillations. And the oscillation exactly means that will be price corrections, right? So September is now over, and there is always a little bit of uncertainty anyway. So it's, basically, it's not is in accordance with what Marcos is telling us that we're going to have these corrections when we go up. Last time we went up after a correction, we went up and reached an all-time maximum. So it's not impossible that that will happen again where we see a correction now, when we go to maybe 130, and then we do it again, and I don't know, by the end of the year maybe we go all the way to 200 or close to it, right? 170, 180. So it's all these are different views, and they are kind of consistent. There are different ways of looking at the same thing, but they seem to be pretty consistent. So you're not going in a straight line to that peak, wherever it is. I think we have not reached the cycle peak, if we have a cycle peak at all. And everything seems to be consistent in saying we're not going there in a straight line. We are going to have these oscillations. And Marcus talks the language of liquidity. Stephen and I many times use this log periodic model, and they are very consistent. So I don't see a contradiction there.
right.
Okay, and then this is for you, Marcos.
Also, Marcus, can you explain how the market makers can allow all these shorts above to make a ton of money by Bitcoin correcting to 100K? Well, that is not exactly what's happening, because you have to understand where they got on at. They got on much lower, so the market is very, very shrewd taskmaster. So what's happening is they're not in as much profit as you might appear to be. They are probably closer to break even, or slightly in profit, or slightly in drawdown. So they're not making a ton of money. That's why the market keeps taking them out. It's not going to let them. Don't worry, they're not going to make a lot of money. So they're going to become part of the liquidity. If you're not doing the way the market, if you're not trading like the market makers, you are the liquidity. So it's taking them out. They don't have a lot of profit. That's why we are going to, more than likely, the probabilities, nothing's 100% certain, but the probabilities all say that we're going to finish that short side pool before we go lower, because it's not like you're saying now, it's not going to allow those shorts to make a ton of money. So yes. Yep.
Okay.
Mm.
Yeah, I don't know. I think I explained it in the introduction, right? I say, look, the models that we made were based on what happened in the previous cycles. The previous cycles were so incredibly irregular that I don't even know why people debate that at all. They were very, very regular. You could find the same peak at the same place. There was this very precise decay. It seems incredible, right? And then one can say, before this cycle happened, well, I'm expecting the same happening this cycle, right? That is the default expectation. Now, reality is more complicated with this model, right? Sometimes when we make a model, then something happened, right? We make a model of the weather. We say, hey, look, I'm expecting summer to start at this month, 10, 15 days later, earlier, later. And it usually happens in that way, right? But then maybe there is global warming that is messing up with that, right? So we need to introduce new information. Now, remember, our main model is the power law. The power law is the foundation, and that is not changing. If anything, actually, is becoming stronger because usually when the power law is challenged is during this bull market. Then everything restores to the power law because we go up as much as we go down, and they kind of the bubble cancel. But right now we don't even have that because we are not going up and we are not going down. We are kind of staying close to the power law. We are oscillating around. Now, are we going to see something different at the end of the year? It will, to be honest, this is still, given what happened, is still a different type of bull market as before. But if we go and Bitcoin does something crazy in the last few months and we reach 200K, that is not yet excluded. I don't know. Maybe the last month do two pair in a month. It's something that maybe Bitcoin did, when it was like $1. All right. I don't think it will happen now. It basically is impossible. As we come closer and closer to December, it's going to be impossible. Now, one thing could happen is that now we're going to have a peak in January or February. Can that be excluded? No, it will be again an exception because we never had a peak after the end of the year, but it could happen. So right now, this I don't know. I have repeated on X on this show the same thing over and over again. It looks like a different type of cycle. I cannot exclude that we still get 200K, but it's becoming more and more difficult. I don't know what else I can say to make it clear. So I don't know. I mean, I appreciate you want to know and you rely on my analysis, but I think I explained it a few times. So in fact, actually, Campy makes a comment that is more a comment than a question, but basically he gets it, right? Exactly this. The power law is stronger than ever. The cycle analysis, it's correct up to the last cycles, but that is, post the fact. It's just describing history. We could have used that history to make a future prediction. It worked, right? If I take the first three bubble, I could have predicted the fourth. It's natural to think I can use the first four to predict the fifth, but it's not working right now. I don't know. The cycle is now over. Let's see what happens, but it seems more and more difficult to reach that 200K. Okay. And I don't want to give odds. Right now it seems difficult. I don't know. I will put it in the 60%, simply because I still trust that there is some kind of a peak, but maybe it's a 180% instead of 180 peak instead of being 200K. But it's very difficult to give probability. I don't even know where to start. The best thing one can do is to draw, and that is something that I do periodically. Maybe I should do it again. I post it on X. I make a straight line, even I say in theory there is not a straight line, but it's an idealization, right? I make a straight line in a log linear chart. It means an exponential. So I'm assuming we are going up as an exponential to that peak. Then I calculate the average gain, the average return that we need. Recently, the last one that I did, I calculated that we will need something like 3 times more returns than what the power law gives. So basically, we need Bitcoin on whatever average period you want to look to do 3 times better than it's doing right now. It's not impossible. Bitcoin has done better than that, but it's becoming more and more difficult. Last cycle, over the entire period, we were going in average 4 times per than the power law. But this time we are not doing even that. Marcus are still there because I see a strange symbol.
I'm trying to get back on track here.
Okay. All right.
Here.
We can hear your voice though. All right. Okay. So this one. So now that we know that it's different, why is different? I don't know. Maybe because the obvious, like right now, most of the game is played by large institutions. There are ETFs, there is MicroStrategy. People are playing all kind of different games that we're not playing before, at least not at this scale. Now, that is not affecting the power law, because that is my thesis, that even with this large institution, the overall growth of Bitcoin is not affected. They are simply part of the big scheme of things, where bigger and bigger things, that is exactly what scaling means, right? We started with small little individual, larger institution, more people. So the scaling behavior stays the same while the cycle is affected. That is the best explanation I can give. I don't know what else to think. I don't know if you guys are thinking about something else. What do you have any idea in mind? And also, okay, so we are saying there is this decay, right? But I think something substantial changes when you're dealing with trillions of dollars versus just hundreds of millions of dollars, right? And right now we reach, basically market cap that is in the trillion of dollars. You need levels of injections levels, in terms of money coming in the system that are completely different from before. And so that could be one of the reasons, but also maybe one more reason. Many of the previous bull markets were driven by a strong interest from individuals, right? From retailers, right? With this term that is often used to describe a little individual, right? And I think that is affected psychologically by the price. And many people that didn't understand Bitcoin, they have even harder time right now to get in, because we see that huge big 100K, and there is something psychological about that, because they think that I don't know, even if they maybe know that they can buy a small portion of Bitcoin, they are scared by 100K. So 100K, you will think that will attract a lot of people, but it also is a put off for a lot of people, because they think I basically lost the train. Why these things is so expensive, So and it's a guess. The problem with these things is it's very difficult to measure these things, right? We know that retailers, they are not like one thing that if you look at some data that maybe supports some of the things that I'm describing, is, for example, these Google searches. And I have a chart that shows that actually there is a power law relationship between Google searches and the price of Bitcoin. It is really cool. But you see right now, if you plot that chart, that we are not at the levels that we should be if this was a bull market. We are much lower than what we usually, because during the bull market, you see a spike in interest, and we don't see that spike. Now, something is different. And, these are some of the pieces of evidence. But I will not worry. It's, I think cycles were fun and exciting, at the same time also scary when you have a huge big correction. I can live without having this crazy bull run. You know, if we have some action that bring us away from the power law, and we have a correction, we have oscillation, I'm fine with that. I don't have a problem. Okay, let's take some other questions. Um,
Fried chicken.
yeah, no bubble for you. Okay.
That's my turn.
And, okay, let's look at this question. If x is correlated with y and z with the mathematical equation, then it should not be an equation between y and z. I mean, when
Well, that's a brain teaser, or what is
yeah,
that?
yeah, yeah. So yeah, we have models of a power law. I was discussing this on X today. We have models of a power law. Both I and other people that analyze the power law has done this. We plotted in gold. I use all the different currencies. We plotted in oil. We plotted in real estate. It's always a power law. You always get a power law. The only difference is that the power of a power law changes slightly. I don't know, maybe it's 5.3 instead of 5.x. Every asset has a slightly different power, uh, but the bottom line is still a scaling proportionality. It has to be, mostly because basically these things like oil relatively to the dollar, gold relatively to the dollar, they grew a little bit, but not factors of hundreds or thousands. And that is what the power law is all about, is showing that there are basically 8 order of magnitude in the growth of Bitcoin, and that growth happen in a regular fashion. And it doesn't matter what you're using. That is another way that actually shows the power law is real, that it should work with different units. So I don't know, it doesn't matter if I use gold, it doesn't matter if I use uh, any other type of currency. The only time when it doesn't work if you're using something completely crazy, but that is not the problem with the power law. Some people don't understand this concept. I don't understand why. But if you have a currency that is devaluing, like Argentina pesos, that explodes because you know, it's the dollar relatively to that currency explodes because it's losing value and is misbehaving. Of course, you're not going to see something regular. You're going to see something, and even there, it's kind of like a power law with some deviation of the end. But it's basically you can use anything. So I don't know if that question is about that, but it works with anything. Um, One could even do, in fact, I did it with currency. I did a model of Bitcoin where I use all the currency of a world, of a major one, and I give a weight to each currency according to the GDP. And you get a beautiful power law, even stronger than the other ones. So you can do it with maybe one day I will do it with all the different assets according to their relative market cap or something like that. Anyway, this guy is thanking you with all thank you, Marcus.
Peace. All
Uh,
right, Neil. I'm riding with you, brother. Hang in there.
we didn't even deviate from the fair price 20% in this close. I also believe, yeah, that is what we all noticed. We didn't go too far away from the power law.
Right.
Okay, my question for Marcus. Okay, this one.
You are using Bybit data for liquidation charts, but in the bigger exchange like Binance, it's totally different. Why Bybit? Not exactly totally different. They're very, very close, extremely similar. I just use Bybit because I actually run a lot of volume on there. I'm familiar with it. But Binance, I would agree, it has more volume.
Yeah, but it should be qualitatively
Yeah,
similar,
yeah,
right?
but qualitatively, yes, it's similar. So it's just a preference. But yeah, Bybit has more volume. That is true.
Yeah, you don't expect it should be different
No, it's just I
in the
run my
behavior.
I
Yeah.
run the we run our algorithms as a company a lot on Bybit, so it's
Okay.
easier to work.
So this question for you guys, uh, if you want to answer Costa, maybe.
Yeah, of course.
Yeah, it's all engineered from the outset.
Yeah.
All the settings, the sizes of the base orders and safety orders, the volume multipliers, and they can all be customized as well. We've got sort of settings that we've simulated that work the best, but they are technically as flexible as you want them to be.
Yes.
Okay, and then we have a question from
I was actually going to add as well. The lack of cycles is actually it probably gives Minotaur a better position, right? Because if you don't have the cycles, the one way, except for stacking, the one way to multiply your Bitcoin was to take advantage of the cycles. If you take away the cycles, you're not left with many options. And Minotaur's probably one that fills that gap.
Exactly.
So, yeah, the algorithm makes a ton of money on choppy markets where it's not going anywhere. It's
exactly. Okay, and what about this? It's both a comment and a question. First of all, this person seems to use the system, but is liking it, but that is great. You want to answer this question?
Either me or Costa's fine.
Yeah, you go for it, Marcus.
Okay. This one is a common question that gets asked. The way we avoid that is the algorithm, based on the time frames of choice that we choose to run it on. It is programmed to not take the top of the market. As long as you can avoid taking the absolute tops, the algorithm is in a very good position to, as Costa alluded to earlier in his presentation, it can walk itself down, because even in a bear market or when the market flips, and I can show you the same thing with liquidity, as we come down, there will be rallies that are based on liquidation and price action. So as we come down, the algorithm can continue to buy and sell on those rallies. So if everything's configured right, which we do that, then the algorithm can basically walk itself down to as low as the market chooses to go. So there's no problem.
And I like this comment. Let's see. This one. I'm actually going to Europe. If there is a conference, let me know. I'm going to Europe in mid-September, and I will stay there for a few months. We will still have a show and so on, but going there for 2 different conferences. One's the Amsterdam one, and one in Bulgaria. So let me know if there is anything happening in Turkey, because I would like to visit for sure. And by the way,
you're going to the Bitcoin conference in Amsterdam.
I'm a speaker. I was invited to be a speaker. I didn't announce it yet, but I'm a speaker in both of these conferences, one in Sofia and the other one in Amsterdam.
Nice. So, when's the date of that? That's November or?
November, yeah. If you guys want to come, maybe we can go all together.
Sounds
we
good.
Should discuss it. We should discuss it. Let's discuss it. Yeah. But anyway, it's a cool comment, because I don't know. I always comment somewhere that I want Constantinople back to the Roman Empire. Greece should have taken it, but the Turkey people don't agree. But it's all fine. It's all fine.
You can have Constantinople. I'm rolling with Carthage, so let's roll.
You're mad with Carthage.
I'm Hannibal biased, so
you want Carthage back.
I want it back.
That's way back in time.
Scipio.
All right, let's go. The next one, the final one that just came up, the doom and gloom. I don't know. I feel like the doom and gloom, maybe a bit more from some people in the comments. None of us are doom and glooming. I think it's way too early. I think we're like 33 months into the cycle. The average is around 36 to 37 months. If anyone can correct me, I think that's around the average. I think 4 months is plenty of time. You can see the liquidity that we've been studying for the last few months on this show. We're going to get to 140 to 160. There's almost in my opinion, a very, very high, extreme likelihood that that's going to happen. So at what point did the cycle not happen? Well, the price goes from 16K to 160 or 140, 160 in maybe a 3-year period. That to me looks like a pretty good cycle. We might not hit the highs of 180, 200. I'm not saying that we won't, but even if we didn't, we're still talking of an appreciation from 16K to 140 to 160. That looks like a cycle to me. Sebastian always reminds me of this. He's like, people are waiting for the bull run. We've been in a bull run almost in 16K. It's pretty much gone up.
Well,
in a straight line.
Well, we have to separate.
We're waiting for a banana. That's what we're waiting for.
Because let's actually correct. Well, we have to separate the growth due to the power law to the growth due to the bull run. Now, when we are at the back, at the bottom, when we were 16, the support, that is a support, right? But the middle power law is much higher.
Right.
So, and we go there because we went to the
There,
top, right?
right, exactly.
And this is what usually happens. Now, we went back to the power law, and then the expectation is that we go higher than the power law, because that is what usually the cycles do. So we had like half of a cycle. We went back to the power law as we were supposed to do.
Right.
But then we didn't go above the power law. That is the component that is missing.
Right. And that's not
what
promised, because the power law middle line, that's the power law.
Yeah.
That's the line. We're on that. We're on that. So we can't expect bubbles. Big deviations. That's
the point I'm trying to make, if we strip away our understanding of the power law, right? If we just strip it all away and just look at the price charts of a financial asset, it does definitely look like a cycle, regardless. Do you know what I mean? Maybe not when we layer over the
Bitcoin has a very precise cycles that mean something precise, right? So because everything is so structured. So right now we are in a weird Bitcoin cycle, where and there are so many signs. One is like what I said, once we cross that, it started exactly like predicted. I predicted the beginning of a cycle. It was supposed to be in November 2024. It did exactly that. It crossed the power law. It went above the power law. Everything seems normal. But then we had this correction. That was the first strong, weird sign. We had a correction that brought us to the 70s. And we are never done that. We're never done, because once we start with bull run, that usually is in October, November of this year, we have one single year of bull run, right? A real bull run. I mean, really, like Costa saying, Bitcoin is 3 years of bull run, 1 year of bear market, right? These are what happened in the previous year. 2 years of this bull run is driven by the power law alone. And then we have 1 year that is a challenge to the power law, because we go faster than the power law. And then we have 1 year that bring us back to the support. This is how it works. That's what has happened every single bull run in the past, or cycle in the past. It's a very precise pattern. 2 years of power law, 1 year of faster than power law, another year faster than the power law, but negative, like going down. And they bring us to the support line. And then everything repeats. It happened exactly 3 times in this particular manner. This time, we are not seeing the normal bull run where we leave a power law, we go many times away from the power law. This year, if you consider the decay, we're supposed to go only 80% away. It's now the 3 times, the 5 times, the 10 times that I showed in the beginning of the show. Remember, the first, if you exclude the first cycle that was before the halving, if you include just the 3 last ones, the first cycle after the first halving, it was 11 times. Imagine if we were going 11 times. That will mean that we were going to reach things like, because by the end of the year, we are going to be 130 by power law alone. If we continue to coast around the power law, that is going to be 130 by power law alone. Imagine 10 times that, right? It will be 1,300,000. This is how the first cycle was, how crazy the first cycle was. That was the typical bull run for Bitcoin. The last one, remember, we went 3 times, about 3 times away from the power law. This time, we were supposed to go 80%. So not even 2 times, okay? Only 80%. And we are not doing that. So I will say it's very different from what we had before. Not to worry about, but it's different. If you use the analysis that we applied to the previous cycle, it's different. There is no doubt about that. Okay?
Well, a few more months, we'll see how it all goes anyway. We'll see what it all looks like.
Okay.
Keep tuning into the show every week, and we'll get there.
What does Stephen Perrineau have to say about the lack of a bubble turning face at this point in time? Well, ask him when we have a show.
Yeah, ask him.
we are having another show.
I'm not him.
Just
Ask him, ask him for me too. I'll be there watching.
So just for a contest, we have this other show. I do 3 shows a week, right? The other show is called The Physics of Bitcoin, and they're doing it with other physicists. Steven, we are 2 physicists. It's much more technical than this show. We explain new ways of analyzing Bitcoin using different mathematical methods, and it's usually at 8:15. You can also, if a time is bad, you can watch our previous episodes. Just go to YouTube and watch all our episodes. It's under live. You will have to go under live and watch all our episodes in the past, right? And so we are using different tools that kind of give similar result to these ones. There are also anomalies in the cycle, etc. So if you have any question pertaining these, we call it, by the way, we use this terminology. We call it the turbulent flow region, because Bitcoin really has 2 regions. Has one region where we are below the power law, where we call it the core power law, and then we have a region that is like almost a turbulent flow. Turbulent, when you see gas moving very fast, etc., right? Turbulence, everybody's familiar with. So it looks like Bitcoin goes through a turbulent phase. That is when we have these bubbles. And right now we have no turbulence. We are flying with almost no turbulence at all. So this is different. So ask Steven. That will be a good question. So join our show. We miss it this week. We will have it next week. Okay? Awesome. Come back during the show.
All right, guys.
What is CRO? And then I don't know this question, but all right.
I don't know.
We don't track that, brother.
Okay, I like CRO. It's a coin.
All
right, guys. I think we cover. Do you want quantum computer? This again, it will be a good question for Steven, because we had actually a Physics of Bitcoin show dedicated to quantum. I think it was number 5. If you guys are interested, so you can watch that one. But ask this question to Steven when we have a Physics of Bitcoin. Just join us. It's usually 8:15 p.m. Pacific time. So some people will be late, in particular on the East Coast, but it's worthwhile, I think. And it's on Wednesdays. Okay.
Yeah.
Okay, I'm going to take this question, and then the show is really over. Okay, we went almost 1:30. I explained it before, so if you, and I can do it, just give me a second. I can. Costa, if you need to go, you can go, right? You were telling me that you had something.
Yeah, I need to go. I've got someone to meet me, but I'll let you guys finish the show. Thank you very much, and I'll see you next week.
Okay, so I'm going to explain it one more time, okay? Because maybe it's worthwhile. Okay, this is how you do it. I'm going to show you this graph, right? Maybe you missed this. So if you show the deviations of Bitcoin, so this is how you do it. You take the power law, then you need to show the deviations in terms of percentage, okay? So I'm looking at the deviations. These are the percentage deviation, right? So percentage relatively to Bitcoin. So if the percentage is 1,500, that means this deviation from the power law was 15 pair, right? So if the price was, I don't know what it was at the time, $2, $3, the price was 15 times bigger during the peak, okay? And you can see they decay in time. You see how they decay in time? They go down, they go down, they go down. And you will think, okay, they decay, but maybe there is not a pattern. Yes, there is a pattern. Bitcoin has been so regular so far. So the way to do it, let's see if I can zoom in on this thing, is that you take the deviations, okay? You're taking the log of a deviations, right? You're taking the logarithm of a deviation. And now you see they became kind of like a straight line. I can draw a straight line through them. Okay, I connect all 4. In fact, actually, it works even with the first one. So if I continue this one, okay, and you don't do it by hand. You will do it mathematically. You plot these data points in a graph. You use what is called linear fitting, or regression, linear regression. You draw a line basically, and the algo when you do linear regression, it's not going to be perfect, right? It's going to be kind of approximated like in average, right? But you see it's a pretty good model of this decay. It's a straight line in a log linear chart that means exponential. So it's an exponential. And so you're calculating the decay, right? How big the decay is. And if you extend it all the way to, you need to know when, right? So you can use December, you can use November, say, okay, which value do I get if I extend this line by November or December? You can see here, I get, even if I'm doing manually, but I say you should not do, you still get a rough estimate, right? Of what you, now, if you want to do it more precisely, you're going to do it with a computer mathematically, using an algorithm. But you can see even by doing it roughly by hand, you're getting a value that is close to 80%. You see here. So, and then you say, okay, what is the value of a power law in December or November? Is going to be around 130. Okay, let me add 80% to that because that is what this model says. If you have like an exponential decay, and you get 200K. And this is the only scientific way to do this. Everything else, all the other people that come up with some estimate, they make it up because it's not based on any real data. And so, yeah, okay, even if we don't reach 200K, at least the methodology is based on something, right? So you can be wrong, but based on at least something that has been true in the past, that we added this decay. You see how you could have predicted this fourth peak using the 3 ones in the previous cycles. It worked up to last time. Now maybe it doesn't work anymore. So something is different. But it's the only scientific method based approach that I know. If you know of anything else, let me know. But I don't know of any other way of doing this logically and scientifically beside this. So it's an estimate based on this assumption that everything work exactly like in the previous cycle. If that assumption goes away, then the prediction doesn't happen. So this is how it works. Anyway, guys, I think we covered a lot of things. We went for about one hour and a half, and it's time to see each other. Come back next time. If you have other questions, we will answer next time. Okay?
All right. See you next week.
Bye, guys. See you next time.